There is a town north of Dallas called Frisco. 10 years ago, it was a farming community. By 2024, it was one of the fastest-growing cities in America. Subdivisions multiplying, schools overcrowded in a good way, strip malls lined with sari shops and Indian street food joints, and home builders putting up development after development because the buyers kept coming. The engine behind all of it was a wave of Indian-born technology workers on H-1B visas, drawn north by corporate relocations, a no-income tax business environment, and a South Asian community that had already put down deep roots. In February 2026, home prices in that corridor fell 9% year over year. The broader Dallas-Fort Worth metro dropped 4%. The epicenter dropped more than double that. And the builders who once said South Asian buyers accounted for 70% of their sales are now watching that figure fall below 30%. This is not just a real estate story, it is a case study in how immigration policy, labor markets, and housing economics are more entangled than most policy debates acknowledge, and what happens when you pull one thread without accounting for what it is holding up. To understand what built the North Texas boom, you have to understand the H-1B program and why it concentrated so heavily in this specific geography. The H-1B visa allows U.S. companies to employ foreign workers in specialty occupations, predominantly technology, engineering, finance, and healthcare. It has been the primary pathway for Indian-born tech workers to build careers in the United States for 3 decades, and that population did not distribute itself randomly. It clustered where the jobs were, and between 2018 and 2024, the Dallas-Fort Worth metro attracted more corporate relocations than anywhere else in the country. Toyota, Charles Schwab, McKesson, Goldman Sachs, major employers moved their headquarters or significant operations to North Texas, and they brought their H-1B workforces with them or hired new ones after arriving. The result was a population influx that was not just large but unusually concentrated in the home buying demographic. Working-age, dual-income households with professional salaries, strong savings cultures, and a preference for new construction in suburban communities with good schools. Builders responded rationally. They built for that buyer. Town after town in Collin County, Frisco, Prosper, Salina, grew at a pace that would have been difficult to explain without that specific demographic. The South Asian community was not incidental to the boom, it was structural. Then the policy environment shifted, not in one move but in a sequence of escalating restrictions that collectively transformed the H-1B program from a relatively predictable pathway into an uncertain one. The Trump administration began tightening H-1B approvals and enforcement early in 2025, increasing denial rates and scrutiny on renewals. In May 2025, HUD barred non-permanent residents, including H-1B holders, from accessing FHA-insured mortgages, the financing product that had enabled many H-1B workers who had not yet secured green cards to buy homes. FHA loan volume to non-permanent residents fell from 6% of total issuance in April to under 1% by June. That single policy change effectively removed a significant share of the buyer pool from the market overnight. Then in September 2025, a presidential proclamation imposed a $100,000 fee on new H-1B petitions. This did not price out the large tech companies that could absorb the cost. It priced out the staffing firms and mid-tier tech contractors that had been the biggest sponsors of Indian workers in markets like Dallas, the businesses that had been feeding the workforce pipeline for years. The weighted selection system that replaced the H-1B lottery in February 2026, favoring higher salary levels, further reshaped the profile of who could even access the program. Simultaneously, the tech sector was contracting for reasons entirely separate from immigration policy. By early summer 2026, tech industry job losses had surpassed 123,000, with AI cited as the primary driver. For H-1B workers in those roles, a layoff is not just a job loss. The visa status allows only 60 days to find a new sponsor before the worker must leave the country or face deportation. That clock turns every tech layoff for an H-1B holder into an existential deadline, and it is turning potential home buyers into people liquidating assets and relocating. The psychological effect on those who remain is almost as significant as the physical departure of those who leave. H-1B workers still employed and still legally present in the U.S. are not buying homes right now. The uncertainty is too high. A worker who cannot confidently project their status 12 months out does not commit to a 30-year mortgage. Builders and real estate agents in North Texas describe the market not as in free fall but as frozen. Buyers who were actively shopping 6 months ago have simply stopped. They are waiting, renting, or quietly making contingency plans. And a frozen buyer is, for the housing market's purposes, the same as an absent one. Before we go further, if this kind of analysis on the intersection of immigration policy, labor markets, and real estate economics is what you come here for, subscribe now. We break down the forces reshaping business and investment every week. The housing market data coming out of North Texas tells the story with unusual clarity. Collin County, the suburban epicenter of the boom, saw home prices fall nearly 9% year over year as of February 2026, more than double the 4% drop across the broader metro. Inventory is rising, listings are sitting. Sellers who bought at the peak are finding buyers' parties walking through their homes and leaving within minutes. Builders who structured their entire business model around the South Asian buyer demographic are now sitting on finished homes with no clear alternative demand to absorb them. The infrastructure problem compounds the housing problem. These towns grew fast and they grew expensive to run. Schools, roads, utilities, parks, all of it was funded on the assumption of continued population growth and the property tax base that came with it. When the buyer pool contracts, the revenue contracts. Towns like Salina, described as essentially a pure growth community with no other significant industry, face a fiscal cliff that the housing correction is only beginning to reveal. There is also a geographic contagion effect that the North Texas data foreshadows. The same dynamic, a concentrated H-1B tech workforce, a housing market that priced in their continued presence, and a sudden policy-driven pullback is visible in the San Francisco Bay Area, Seattle, Northern Virginia, and the Research Triangle in North Carolina. These are not identical markets, but they share the same structural vulnerability: housing values that were partially built on a demographic that is now being systematically removed or deterred. And unlike a recession-driven demand drop, which typically recovers as the broader economy does, a policy-driven demographic shift does not automatically reverse when conditions improve. The workers who leave for India, where 7,300 Indian tech professionals have already returned in the first half of 2026 alone, are not necessarily coming back. India's own AI sector is expanding rapidly, global firms are opening engineering hubs there, and competitive stock options are making the calculus of staying versus returning far less one-sided than it was 5 years ago. The replacement buyer that the North Texas market needs may simply not exist in the form it had before. The argument from supporters of the visa restrictions is straightforward. The H-1B program was being abused by staffing firms importing cheaper foreign labor to undercut American workers, and the corrections were overdue. That argument has genuine merit in parts of the system where fraud and wage suppression were documented. The question the North Texas housing data forces onto the table is what the economic spillover looks like when a policy correction hits markets that built real infrastructure around that population. It is not just the Indian-born homeowner facing a 60-day clock who loses in this scenario. It is the American homeowner next door whose property value just fell 9%. It is the school district that built a new campus on population projections that no longer hold. It is the builder who pre-sold phases of a development to a buyer demographic that is now absent from the market. Immigration policy and housing economics are not separate conversations. In Frisco and Prosper and Salina, they were always the same conversation. Here is the bottom line for anyone watching this from an investment or business perspective. Real estate markets that were built on concentrated demographic demand, regardless of that demand's origin, carry a concentration risk that conventional market analysis often underestimates. The North Texas correction is not a story about Chinese EVs or AI or interest rates. It is a story about what happens when a single policy decision removes a structural pillar from a local economy that never fully accounted for the fact that the pillar was there. The question real estate investors should now be asking about every high-growth suburban market is not just what is driving demand today, but how durable that demand is if the policy environment shifts. That question applies well beyond housing. The corporate campuses that relocated to North Texas because of the talent pipeline, the local service businesses that grew up to serve a professional South Asian community, the school systems that hired staff and built facilities on projected enrollment growth, all of them made investments premised on a continuation of conditions that policy has now interrupted. The economic ripple from a housing correction in Collin County does not stop at the property line. It moves through every business, institution, and municipal budget that was built around the same assumption. In 2026, that question has a very clear and uncomfortable answer in at least one corner of Texas. And the towns that built schools, roads, and tax bases around a population that immigration policy is now actively displacing are going to be living with that answer for years, regardless of how the policy debate resolves itself in Washington. Thanks for watching. If this changed how you think about immigration, housing markets, and the hidden dependencies inside fast-growing economies, subscribe so you do not miss what comes next.